Today, JOANN finally launched their IPO. With more than 75 years of history, it's a household name, and that's one reason investors are bidding on JOANN stock. Also, the craft retail bake by Leonard Green and Partners set terms for its initial public offering that could rise as much as $186 million. Hey, what's up guys? Welcome to Investors Game. In this video, we're gonna be talking about should you invest in JOANN stock? And if you guys wanna see any more investing tips, stocks, method, and a strategy for me in the future, then be sure to subscribe down below. Turn on my post notifications so you never miss another upload. Now, let's jump right into the video. Founded in 1943, JOANN is an American arts and fabrics retail. The company is based in Cleveland, Ohio, and is the US leader in sewing market. JOANN operates 855 stores across 49 states. The company states its mission is to inspire the creative spirit in each of us, our customers, and ourselves. Although the company's main focus is sewing, JOANN has expanded its offering to meet the needs of a growing industry. It aims to be not just the top place for sewing, but also a one-stop shop for the supplies, guidance, and inspiration needed to achieve any project or passion, a growing player in the arts and craft market. JOANN's biggest competitors are Michaels and Hobby Lobby. The company recently announced a JOANN IPO, but before we get into the details of JOANN stock, let's take a good look at the market. It's not surprising that JOANN chose to go public now. As a result of COVID-19 pandemic, there's been an increase in people taking on new projects. JOANN's primary industry is creative projects, according to the JOANN IPO prospectus. The company research from July 31st, 2020 shows the industry had grown more than 4% on the previous 5 years. Additionally, analysts reference in the prospectus, about 30% of Americans participated in sewing and clothing repair during the pandemic. JOANN says the industry year-over-year sales grew by 22% in 2020. The company claims that more than 50% of its product sale can be directly matched with competitors because of its own brand product. These products include copyright fabric and designs. The company also offers socially distant options such as delivery, curbside pickup, and buy online pickup in store. One thing noted in JOANN IPO prospectus is a change in demographics. As a result of people making handmade masks, the number of sewers has grown at a compound annual growth rate of 12% since 2012. SVP Worldwide estimates that 60% of sewers are 30 years old or younger. This brought the average age of sewers down from 48 in 2004 to 37 in 2020. So in summary, JOANN is a market leader in sewing and a large player in arts and craft, and is well positioned to continue growing its business. In 2018, JOANN recorded $2.31 billion in net sales. Sales grew to $2.32 billion in 2019, before falling to $2.2 billion in 2020. However, JOANN's year ending February 1st, which means its 2020 information doesn't represent net sales during the pandemic. But the company does provide data for the 39 weeks ended October 31st, 2020 and November 2nd, 2019. In 2019, net sales were $1.55 billion. Sales grew to $1.92 billion in 2020. Looking at profitability, there are some mixed signals. In 2018 and 2019, JOANN recorded net income of $96.5 million and $35.3 million respectively. But the year ended February 1st, 2020, JOANN recorded a net loss of $546 million. This was due to the company's goodwill and trade name impairment. The good news is that for the 39 weeks ended October 31st, 2020, JOANN didn't have goodwill and trade name impairment costs and recorded a net income of $174 million. Additionally, JOANN has a standing debt. As of November 2nd, 2019, that debt was $1.36 billion. The company was able to use internally generated cash flow to pay off $433 million. JOANN claims its total reduced debt was $929 million as of September 31st, 2020. As far as paying off more debt with proceeds from the IPO, the company plans to use funds from offering JOANN stock to generate corporate purpose. As of October 31st, 2020, JOANN had $33.2 million in cash and $2.5 billion in total liabilities. The cash flow during the 12 months ending October 31st, 2020 was $280 million. The price for the IPO is set at $15 to $17. That's close to the price range of competitors Michaels when it went public in 2014. JOANN stock will trade on the Nasdaq under the ticket symbol JOANN. It's like the JOANN IPO will see successful debut but not a big one-day pop. That means JOANN stock may be a good long-term opportunity, but only time will tell. the US market for crop and sowing supplies, will be an estimated $3.6 billion in 2021. This represents a forecast growth rate of 2.3% over the previous year. However, the annualized growth rate from 2016 to 2021 is expected to be negative 4.7%. Also, the main negative factor impacting the industry is a decline in life cycle stage and low barriers to entry. However, the impact of COVID-19 pandemic may provide an impetus to grow as consumers perform more art and craft and hobby work in the home in response. Management seeks to cast the company as part of the credit product industry and sees a much larger market size of $40 billion. Major competitive or other industries participating include Walmart, Target, the Michael Companies, Hobby Lobby, and Fabric.com. JOANN intends to sell 11 million shares of common stock, 5.5 million from the company and 5.5 million from selling shareholders. No exiting shareholders have indicated an interest to purchase shares at the IPO price. Assuming a successful IPO at the midpoint of the proposed price range, the company enterprise value at IPO will be approximately $1.5 billion. Excluding effect of underwriting option and private placement share, JOANN is seeking public capital, primarily to pay down debt, and the firm is private equity owned, and its balance sheet shows significant debt. The firm's financials indicate strong growth during the 2020 pandemic period. The primary risk to the company's outlook is consumers moving to perform fewer do-it-yourself activities as the effect of the pandemic waned in the wake of increasing vaccination, which are occurring in the US at up to 2 million per day. As for valuation, JOANN is favorably priced compared to competitor the Michael Companies, so the IPO doesn't appear to present pricing challenges. While the firm's 2020 top-line revenue growth results were impressive, I'm concerned about its pre-pandemic revenue contraction and generally uneven results. Additionally, the company has significant debt, like so many private equities-owned firms, and will use all the IPO process to pay the debt down, with none left over the future growth plans. Given the pre-pandemic revenue contraction, the debt load, and my concern that consumers will be less enthusiastic buyers or craft items as the pandemic wanes in 2021. IPO investment have an exciting, almost exotic ring to them. They conjure up vision of large, sophisticated investors when an inside track making millions on a single stock transaction. For better or worse, that's more the TV version of IPOs than the reality. True, some IPOs succeed in creating overnight millionaires, but it's likely most of those investors were already close to become millionaires before the IPO. For the average investors, IPO may provide to be only a little bit more profitable than ordinary stock investing. Maybe you'll make a lot of money on a single trade, and maybe you won't. Before even considering investing in an IPO, you should be aware that they don't always have a happy ending. One celebrated recent example is Uber. The stock went public in May 2019 at $41 per share. It climbed as high as $46 on June 28, but then began to struggle. It reached a low of $21 on March 2020, then recovered. As of July 27, the price is $30 per share. Have you bought Uber when it opened? You'd be sitting on a loss of approximately 20% over a space of just 14 months. And that even includes the general stock market rebound that taken place since late March. If you want to invest in IPOs, be sure to learn all you can about the company before it goes public. The fact that it's going public doesn't give it value, but it's very easy to get caught up in the misguided belief. You should be also avoid the temptation to get caught up in the exciting of the moment. IPOs can be overrated. If a company is a good investment, it will be good investment well after the IPO. In fact, it may be even better to wait until after the IPO, when the price of the stock is normal or even drop as the excitement dies down. Also, make sure you don't get carried away with IPO investment. Limit participation to no more than 10% of your portfolio. That way, if the IPO goes against you, the loss won't be catastrophic. And remember, investing doesn't have to be hard if you start early. If you like this video, don't forget to hit the like button. Let me know in the comment box, would you invest in JOANN's IPO? Subscribe to my channel because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time!